Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is up about 4% today. It did hit a high of the day today at about $425.70 or so. What Elon Musk just did has not happened since 2020. And what Elon Musk did was went out and bought Tesla stock on the open market. A big purchase. This has analysts commenting on this, Elon Musk commenting on this, and others. So is this big? Is this important? Is it a non-event? We'll get into all of that here in today's episode. Break down all of your Tesla stock breaking news and what is happening in the markets today, because there is some weird activity today, like the VIX, as a lot of you guys have pointed out, is kind of skyrocketing, whereas the markets are doing quite well today. So we have a lot to get into in a short amount of time. Hit the like button, subscribe to the channel, and check out that link down below in the description of this video if you want to come join the trading community. We're going out, finding small cap AI stocks and investing in those, picking out the high quality names and taking on positions. That's the long story short. If you want to come join, link down below. And this portfolio year to date is up 192%. We are outperforming, I believe, all hedge funds and institutions this year. I don't think there's another firm with a better return than us, but it's not a recommendation. It's not financial advice. You may lose all of your money, blah, 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 blah. You get the shebang. Just don't be a jackass, right? If you join this, you got to put in the work. You got to understand the companies you are investing in. Regardless, that is the bare minimum. And you are not guaranteed. As always, let's get into what happened here. So the last time Elon bought Tesla stock on the open market was February 14th, 2020, when he purchased 13,037 shares for $10 million. Last Friday, on September 12th, 2025, Elon bought $1 billion of Tesla, meaning this was his first open market purchase in 5 years and 7 months. And this is the SEC filing. Isn't it funny? Go look at the last video posted on this channel. It is titled Secret. Someone knows something about Tesla stock. You can't make it up, okay? They already knew that Elon had bought Tesla. Thursday and Friday, the stock was reacting to that. Big money already knew that. Today, again, a further reaction of that. It's just, again, to highlight what a disadvantage retail is at. When it comes to big news, institutions get it first. And if you are a viewer of this channel, I will always give you a heads up. I watch the flow. I watch the news. I track the sentiment. And it was obvious that there was something cooking here. After all, Elon Musk did say on September 7th, quote, "You'll thank me later." So that probably has something to do with it. So your Merit says here, it's worth noting that this stock purchase was not part of a 10b5-1 trading plan. Elon literally just decided to straight up buy $1 billion of Tesla stock on the open market, increasing his stake in Tesla by 0.62%, a big vote of confidence. And he did buy 2.57 million shares in total. Elon Musk shared this image on X and says Tesla up $69 to $420 as foretold in the prophecy. So he's making a joke out of it. And Elon says that Tesla is up 87% since Tim Waltz celebrated the stock, quote unquote, dropping. Also in the news today, William Blair analyst Jed Dorsheimer in a new Tesla note says, quote, "With Musk's Tesla stock purchase combined with the upward momentum for delivery expectations and robotaxi rollout, we are becoming more bullish. This purchase is Musk's first buy since 2020. To us, this sends a strong signal of confidence in the most important part of Tesla's future business, robotaxi. We recently participated in a meeting with Tesla's board of directors to discuss the details of Musk's performance performance package. The board is confident of its position in the Delaware case and anticipates a verdict by the end of the year. It does not expect a similar situation to occur under new Texas jurisdiction. Musk has the board's full support, and we expect he'll get more than enough shareholder support for this to pass with flying colors. So William Blair is saying, hey, we have to get more bullish on Tesla stock. Also in the news today, Australia is on track to exceed its 2030 rooftop solar targets with a combined 1.1 gigawatts of new capacity installed across almost 116,000 households and businesses in the first half of 2025. Siddharth got the first direct customer Tesla Model Y delivery in India. And Rivian is finally set to begin construction of its second U.S. production facility in Georgia, a $5 billion facility east of Atlanta. The 2,000-acre site aims to produce hundreds of thousands of EVs annually starting in 2028. And the first customer deliveries of the new Tesla Model Y Performance are about to begin with new photos from Switzerland. Tesla has introduced a new high-priced propulsion-related part warranty for 2026 model year vehicles, providing an additional 7 years or 70,000 miles of coverage on certain parts. In option activity today for Tesla, you have 594 different trades totaling $624 million with a positive order value of 87%. Hedge funds and institutions are crawling over each other to get bullish positions in Tesla. You do have a lot of shorting activity though today. 2.72 million shares on net have been borrowed, aka sold short. 2.94% short interest of free float. The dollar amount sold short at 31.53 billion with about 79.64 million shares that are currently sold short. Now, in broader market news today, one of the biggest pieces of news is President Trump says the SEC should require public companies to report results every 6 months instead of quarterly. He says, quote, "This will save money and allow managers to focus on properly running their companies." Trump says subject to SEC approval, companies and corporations should no longer be forced to report on a quarterly basis. Quarterly reporting, but rather to report on a 6-month basis. This will save money and allow managers to focus on properly running their companies. Did you ever hear the statement that China has a 50 to 100 year view on management of a company, whereas we run our companies on a quarterly basis? Not good. Which Wall Street doesn't like change. Okay, change makes Wall Street a little nervous, and I don't know if this is the best area to be focusing on, right? I think we have a lot of issues as a country. Again, is this one of the big ones? Will this make much of a difference? Probably not. I do understand from the perspective of, if companies report every 6 months, then they can really focus on their business, executives, and not planning out the next earnings report. I get it from that perspective. 3 months, you got to start planning the earnings call, the, report itself, a month and a half in advance. So you're really only operating free and clear for half of a quarter until you got to start worrying about the conference call again, the earnings and all of that. So I understand it from that perspective, but I think Wall Street, looking at this from a Wall Street lens, Wall Street's going to say that's less clarity. That is more uncertainty. We don't like that. I think that's how Wall Street's going to view this. Is it the end of the world? Probably not. But I could see it as a pretty contentious issue. Okay, especially if it does come about in September, it may not be something that Wall Street likes. And that could explain some of the weird moves in volatility today. Now, obviously, okay, just to state the obvious here, we do have the Fed meeting this Wednesday, okay? That is going to be a massive catalyst. That is going to cause hedging before, okay? And I'm not surprised to see the VIX up 6% today. But I do think some of that comes down to what Trump said as well. The knee-jerk reaction from Wall Street is going to be to not like less reporting, right? Wall Street always likes more information for good or for bad, right? So I think some of Trump's comments on changing their reporting requirements could be raising some of the fear today. Now, the VIX basically measures the puts and calls on the S&P for 30 days out. So the VIX rising today just means more people are buying puts on our markets. Now, markets are rising as well. You're heading into Wednesday's Fed cut, and a lot of Wall Street thinks we're going to see a sell the news event on the first Fed cut anyways. So I expected to see a rise in volatility. And I specifically said yesterday, Sunday night, that if we saw stocks do well into Wednesday, you're probably going to get a sell the news event. But this Trump news just kind of adds to maybe a little bit of that hedging. That is the main headliner here on CNBC. It says Trump advocates an end to quarterly earnings reports. Now, the Russell 2000 is up 1/3 today. NASDAQ up 0.77%. S&P 500 up 0.37%. And the Dow is up 0.05%. So even with that, it's still a pretty good day. 10-year Treasury yields are trading down about 2.5 basis points. Oil is up about 1%. Gold up about 1%. And various cryptos generally trading lower a couple of percentage points today. Now, Trump's tariffs are fueling inflation. Congressional Budget Chief says. The Congressional Budget Chief Director, Philip Swagel, said that President Donald Trump's tariffs have pushed up inflation, not by a lot, but by enough to show. He also said that inflation has run higher than expected. He says with Trump's tariffs stuck in legal limbo, Swagel said that the looming Supreme Court decision is one of the biggest uncertainties in the U.S. economy. And that's true even from a market perspective. There's obviously a good and bad implication for the court shutting down tariffs, right? Like if the court shut down tariffs, that means less inflation, maybe less disruption for especially smaller mid-sized companies. If the court shut down tariffs, that means less revenue from the government, a more precarious fiscal outlook for the government. So there's honestly good and bad that goes alongside that. Markets can handle bad news really good. They can't handle uncertainty. So I think the uncertainty is rising. You got, again, the looming decision in the courts coming in the next month or two. You have now Trump calling on quarterly reporting to come to an end, and you have the Fed meeting on Wednesday. There's a lot of uncertainty starting to build. Don't be surprised, as I've said before, if we start to get a little bit of chop in September. JP Morgan has said that U.S. stocks could cool if the Fed restarts rate cuts this week. Now, again, if the Fed cuts rates this week, that is actually a good thing, right? That lowers the odds of a recession. That's overall a good thing, right? But it's like Nvidia earnings. I think it was the best example of this. If you rally into a big event, if people are optimistic into a big event, 9 times out of 10, you do see the opposite reaction afterwards. Now, it is possible we just rally into Fed cuts and then continue to rally. Like, that is not impossible. But given it is September, given the uncertainty is rising, you could sell off after the Fed cuts, but it's not going to be like a correction level sell-off. It's going to be a lot more mild than that. Morgan Stanley says equity markets hinge on weak U.S. jobs data and whether the Fed cuts rates quickly enough. You also have this bit of uncertainty that is probably contributing to the VIX. Trump says congressional Republicans, including leader John Thune and Speaker Mike Johnson, are working on a short-term, quote, clean extension of government funding to stop crying Chuck Schumer from shutting down the government. So a government shutdown is looming as well. The continuing resolution funding for the U.S. government is set to expire on September 30th. So a government shutdown could occur on October 1st. Now, it was also in the news today that Nvidia was kind of condemned by the Chinese government for anti-monopoly practices, right? For some bad business. Nvidia's spokesperson says today, we we will continue to cooperate with relevant government agencies as they evaluate the impact of export controls on competition in commercial markets. They also said, we comply with China's anti-monopoly law in all respects. You can kind of see how there's just a lot of issues starting to come up at this point that are putting pressure on volatility. Not necessarily like crushing markets, but it's one of those things like down the line could be an issue. The last time I said this was when Trump was threatening to put additional tariffs on China because of the Russia-Ukraine war. Okay, I said, hey, this is not a problem at this point, but it could be a problem later on. Government, shutting down, issues with Nvidia and China, although that's less of a broader issue, that's still important. Trump trying to change the reporting requirements. You can see how these things are in the background. The tariff case in the courts. All of these things are issues to watch, but not a pressing disaster at this point or pressing larger issue. The Fed this Wednesday is going to be the biggest event for this week. And I personally think it could go either way. Again, it could be positive, could be seen as negative. If it is seen as a sell the news event, okay, I think it's going to be very short term. Okay. Now, it says here, Trump's policy shifts, tariffs, Fed issues, and stimulus moves are unlikely to derail the U.S. equity rally, per Wolfe Research. Now, today, China has said that they've reached a TikTok framework agreement. So that was one of the good news today. This, I think, could be really good news, like sleeper good news, because if China is willing to make a deal on TikTok, then maybe Trump is willing to relieve some of the tariffs a bit. Like, I'm sure China has in there somewhere that, sure, they're willing to sell TikTok or be a partner with the U.S. on TikTok for lower tariffs for this or that. I don't think China cares about the dollar amount, right, of getting a deal done with the U.S. on TikTok. Like, China doesn't care about that, right? They're going to want something else. And I think that framework of a deal likely comes with slightly lower tariffs. Not sure how much lower, but that's my opinion. And President Trump will meet Chinese leader Xi Jinping on Friday to complete the TikTok deal, per Besson. And China's top trade negotiator Li Shenzheng said this: China reached an agreement with the U.S. on TikTok based on our assessment and judgment. And China's cyberspace regulator official says China to review and approve tech export related to TikTok in accordance with the law. Now, the last thing I really want to talk about here in this video is the market's sentiment and positioning. Okay, even though we do have these uncertainties starting to build, even though we do have the VIX up over 6% today, there is so much fear out there in markets that I think it's going to be really hard to get a large sell-off because people are just not bullish enough, right? You get like corrections and large sell-offs and real panic moments when you have a lot of bulls and things just do not go the way the bulls expect. You don't get panic moments or big, drawdowns or even drawdowns at all, really, when you have this many bears historically, right? Historically, when you have this many bears, you want to be buying the hell out of markets. As per the AI Investor Sentiment Survey, 49.5% of investors currently report that they are bearish. 22.5% are neutral, and 28.0% are bullish. That is the worst level we have seen in a very long time. Now, again, indexes are at all-time highs today, but the Fear and Greed Index is at 57 out of 100. It's pretty much neutral, technically coming in at greed, but pretty neutral overall. Yesterday's or Friday's close, you were at 54, which was in the neutral category. Market momentum is greed, stock price strength, extreme greed, stock price breadth is greed, put and call options, extreme greed, market volatility is neutral, safe haven demand is fear, and junk bond demand in extreme fear. So even though we do have these pressures mounting and there are things to definitely watch for, This Wednesday is the big catalyst. Hard to say exactly what happens with that. I instinctively want to say it's going to be a positive, but again, as I said before, if we rally into Wednesday, you probably get a short-term sell-off, but don't lose sight of the prize here, right? Don't lose sight of the ball looking at the stands, okay? This is a positive start to more additional rate cuts. Whether we sell off 1 or 2% following the rate cut, it doesn't matter. We're in September. We have weak seasonals, and that could be very much what drives the post-rate cut reaction. So let me know your thoughts on this down below in the comment section. I did want to spend a lot of time on, again, some of these issues in the marketplace, because you do see, again, the VIX up 6.5% today, which is a very large move on a pretty good day for stocks. So it's kind of unusual. Again, it just means people are hedging portfolios for all the reasons we talked about in this video, but I am not concerned at all. I think October, November, December are going to be some of the best 3 months we have seen ever. And what if this TikTok deal does mean lower China tariffs, at least to some degree? Could be something not a lot of people are talking about. So let me know your thoughts on this down below in the comment section. Hit the like button, as well as subscribe to the channel if you have not done so already. Check out the link down below in the description of this video to come join the trading community. Have a great rest of your day, and I will see you in the next one.